Hi Forex traders, you're welcome to this YouTube channel. Today I'm going to be introducing you guys to an amazing price action strategy that's going to make you guys a lot of money if you learn this concept. It's actually the concept of blending market structure and liquidity. I'm sure if you've been following me for quite some time, and even if you're a new follower on this YouTube handle, you should go down to the videos, scroll the videos on the YouTube handle. You're going to see videos where I clearly taught about market structure and videos also where I taught about liquidity, so that you get to clearly understand the topic of liquidity and market structure. But in today's video, I'm just going to be blending structure and liquidity and show you how powerful these two subjects can be when trading price action strategy. So there are basically two types of market structure that every trader, of course, is aware of. And if you're ever going to make money trading financial markets, you must clearly understand what market structure looks like. On the chart, there are actually about 2 to 3 methods of identifying market structure, but we're not going to dive deep into that. I'm just going to clearly outline the basic market structure concepts that we have that everybody is aware of, which is the bullish and bearish market structure. And in a bullish market structure, you anticipate price action to continually form higher highs, higher lows, higher highs, higher lows, higher high, higher low. All right, this is what a typical bullish market structure looks like. All right, then at the time where we see price action take out the previous higher low and give us a close below that higher low, that is called a change of character or shift in market structure. It's called change of character or shift in market structure. Okay, so we are changing from a bullish market character to a bearish market condition because the last swing closed below the previous swing low. All right, so and in a bearish market structure, we want to see price action from lower low, lower high, lower low, lower high, lower low, lower high, because we're in a bearish market structure, lower low. And at the moment we see price take out the previous lower high, what we now have is a change in market structure from bearish to bullish. We just shifted market structure from bearish to bullish, and we want to see price now start to form higher high, higher low, higher high, higher low, higher high. This is what market structure is all about. Identifying the current swings, and at the moment where price changes direction, you should be able to tell that now we just changed from a bullish market and we're about to start creating a new market trend because price action just changed structure. Okay, so we are blending the use of this market structure. What is more important to us is identifying when there's a change of character and identifying the next draw on liquidity. There are actually about two types of liquidity I'm sure you guys are aware of now. If you're not aware of this, please go to the videos on the YouTube handle, find the video where I talk about liquidity. You're going to get more insight about the subject of liquidity. So there are two types of liquidity. Basically, we have an external range liquidity or the internal range liquidity, and these two serves as the drawn liquidity. So every time we see price action moving to the upside, it's because there's a drawn liquidity residing at the upside. Every time you see price action trending lower, it's because there's a drawn liquidity residing somewhere below the market. That's why price action is trending downwards. Okay, so for us today, this strategy is about identifying change of structure and identifying the opposing draw on liquidity. So what do I mean? All right, just pay attention to what I'm about to show you. So imagine that we have a market condition here where we've been bullish, price action has been forming higher high, higher low, higher high, higher low, and all of a sudden we have a shift in market structure bearish, and price action created change of character. Of course, you know what this means. It means that we're about to start trending lower, and once you see this, there's just one more confirmation you need, which is you need to see the opposing drawn liquidity. You need to see old lows below, relative equal lows or equal lows on the opposing side of the market for you to be in this bearish market. Now we have a change of structure from bullish to bearish, but we are not going to sell until we see that there's an underlying drawn liquidity residing below the market. For example, we have an old low here that is yet to be traded into. We have another relative equal lows here that is yet to be traded into. You see that? Or relative equal low that is yet to be traded into. These two levels will serve as the drawn liquidity. So we'll take advantage of this change of character and sell into the next drawn liquidity. How are we going to do this? We're going to wait for price action to reprice into the internal range, fair value gaps, other blocks, or breaker or mitigation block. Right here, what you have is a breaker because price action took out the high, and price action created that bearish breaker because we closed below that higher low. That's the change of character. We like to sell when price returns into this level, the breaker or the fair value gap around that same area. Then we're going to sell right here into the next drawn liquidity, which is the relative equal lows right here. This is what this strategy is all about. At the same time, price action is selling. Okay, it's selling. We're selling, creating lower low, lower high, lower low, lower high. If we see a change of character from bearish trend to bullish, what are we going to do? We're going to identify the opposing relative equal highs or old highs residing above the market. That tells you that the market has an objective that is yet to be traded into, and we're going to leverage on this change of structure and position ourselves for a buy into the next draw on liquidity. Is that okay? So we will identify, we're doing this before we go to the chart. You have an old high here, you have old high, you have old high here that is yet to be traded into, and now you have a change of market character. What are you going to do? You're going to wait for price to return into internal range. See that price should return into the internal range, the breaker, the mitigation, the fair value gap or the other block. Okay, the fair value gap or the other block, and we're going to take the buy into the next drawn liquidity. This is what this concept is all about. So let's go to the chart. Let me just show you few examples, and we're good to go. So this is Euro USD 1 hour time frame. This is Euro USD 1 hour time frame, and you will agree with me that this is a time where the market's been, we've been bullish because we see price forming. Okay, let's even start from this. Price action was previously selling. You see price creating lower low, lower high, lower low, lower high, lower low. Of course, lower high. Price action still created, couldn't take out the previous low, so this was a higher low, and we had a shift of structure. Why do we have a shift of structure there? If you zoom this clearly, you're going to see what price did right here. Price formed microstructure. This is another microstructure creating lower low, lower high, lower low, lower high, lower low, and look at what happened. Change in market structure because price took out the low here and created shift of structure bullish. All right, so this is change of character. What is the other thing you are looking for? You are looking to confirm if this is going to hold by simply identifying the next drawn liquidity on the opposing side of the market. So you're identifying, do you see that there's an old high here? There is relative equal highs right above that is yet to be traded into. All right, and you're going to take a buy when price returns into the internal range. Remember I said the fair value, the breaker or mitigation, or the other block. And right here you have a breaker because we took out the low before the shift of structure. As price returns into the breaker, you're going to take a buy right here at the breaker into the opposing drawn liquidity. That drawn liquidity is the main thing you are looking for, not just a change of character. If you have a change of character and there is no opposing drawn liquidity, relative equal highs, old highs, or thereabouts, then that's not a good setup for you. So if you took a buy here using this strategy, if you took a buy right here and you have your stop loss just below or at the low of the breaker, you are going to see that price must have delivered an average of 1:3, which is a very good risk reward ratio using this concept, and this is just a 1 hour time frame. All right, at the same time, price action has been creating higher highs, higher low, higher high. What do we see? See price action after taking out that objective, took out the high here and created change of character from bullish to bearish. You see that? That's a change of character from bullish to bearish. So what do you have here? You have confluence of the bearish breaker and also the bearish order block right there. You see that bearish order block? They are almost at the same place. So I would put more concern or more attention. I'll give more attention to the bearish order block or 50% of the bearish breaker as well, because there's no inefficiency around here. There's no fair value gap. It's just the breaker and the order block. Is that okay? Then what is the confirmation you are looking for? Opposing drawn liquidity. You need to see relative equal lows. You need to see old lows. So if you take a look at this clearly, you'd see that price created some lows here. See that low there? We have another one below, relative lows here. Then you have also relative lows here. All these are your potential draw on liquidity. So at the time price returned into the bearish order block, you would take a sell at the bearish order block right there, stop loss at the high of the breaker, and you're extending to the drawn liquidity, and you've seen price delivered an average of 1:3 or 1:4. Let's look for another clear scenario. This is another scenario where price has been, creating higher high, higher low, higher high, higher low, higher high. What do you see? Change of character. Price took out the high and created change of structure from bullish to bearish. You see that? What is the confirmatory signature you're looking for? The drawn liquidity, which is the opposing relative equal lows. You're going to extend that, and you see how price traded back into the bearish breaker and extended into the drawn liquidity right there. Price delivered an average of 1:2. It's another scenario where price took out the low, created shift of structure bullish. Right here, price traded back into the bullish breaker and tapped into that fair value gap right there. If you took a buy from here, where is the confirmatory signature? You see the relative equal highs, and the equal highs there. Price traded into all of those levels. This is another scenario where price took out the high right here and created change of structure from bullish to bearish right at this place. Did you see that price traded into that bearish breaker? And what is the confirmatory signature? We're looking for opposing drawn liquidity, old lows, relative equal lows right here. You see that if you took that sell from here, when price returned into the breaker and extended into the drawn liquidity, price delivered an average of 1:4. I'm sure you can see that this is a very powerful concept. And if you do your homework, go to the chart, do the inside study, find these setups as much as you can on the assets that you prefer to trade. And if you train your eyes to see these things, then I just gave you a $1 million trading strategy. Don't forget, if you're looking for an accountability partner, you're looking for a close mentorship, you can just check the link on the description of the video and sign up for our one-on-one mentorship program, which of course is one of the best that we have available at the moment. Reach out, sign up for the one-on-one mentorship, and I'm sure it's gonna give you a turnaround in your trading. Don't forget to subscribe to this handle, and if you like this video, share it to 1 or 2 people. Until next time, I wish you good luck, good trading.